Hello guys, so HYBE just reported its third quarter earnings yesterday, and at first glance, the numbers shocked investors because the company posted their first operating loss since going public, which is a major contrast to the record-breaking revenue that they announced at the same time. But behind those numbers, there's a more complicated story because they framed it as a recalibration. So Jason Lee, or Lee Jae-sang, the CEO, where is it? I think I have a picture of him somewhere. Oh, right here. So he spent most of the call explaining why, earnings call, that's what I mean, conference call. He explained why HYBE deliberately took a short-term hit to strengthen their global foundation, restructuring their US business, launching new teams in Latin America, and preparing for BTS full group return next year. But even so, the tone of the earnings call felt unusually heavy. And by the way, I streamed that earnings call on my channel for you guys to watch, right? And they even released a separate shareholder letter simultaneously. And it read more like a personal apology than a corporate press release. So we're going to talk about all that in this video. What exactly happened and what does it mean for HYBE's next phase? So we'll break down the earnings call, the shareholder letter, and what both reveal about where HYBE is headed next, and my opinions on these aspects. Okay, so let's start with some, let's start here. So HYBE's third quarter earnings call. It started with a clear message. The numbers may look disappointing, but they were the outcome of deliberate, forward-looking choices. And CEO Lee Jae-sang, the company, acknowledged that many investors felt uneasy about the short-term losses. Yet he made it clear that the company's profitability decline stemmed from proactive investment. Specifically global IP expansion and the restructuring of HYBE's North American operations. And he said that these costs were unavoidable if the company wanted to secure long-term sustainability and global leadership. But I don't know, for me, it was very noticeable that the earnings call itself started with that acknowledgement. Let me play you the earnings call that I recorded. I will play you the English translation. Okay, where is it? Right here.
To note, cost have a base.
에 대해서 말씀을 드리겠습니다.
So they had a English translation, sequential translation, right?
Good afternoon. Thank you for joining today's earnings call. We fully understand the concerns and disappointment our shareholders have about this quarter's performance.
Right. So right from the get-go, they said that we're fully aware of the concerns and disappointments that shareholders have about this quarter's earnings. Okay. But then from then on, he goes on with his explanations. So CEO emphasized that HYBE's fundamentals remain solid, and the company's underlying competitiveness and growth engine are still intact. And this phase is about reinforcing its foundation, reshaping the business structure and execution system to prepare for the next leap. And it makes sense that he says all these because we all know that once BTS returns, HYBE will make tons of money. But even still, the operating loss was pretty huge for this quarter. Okay, so next he talks about individual groups and artists. So in the music segment, 17's special unit, S-Coups and Mingyu broke records with their first mini album, Hype Vibes, selling about 890,000 copies in its first week. And it became the best-selling K-pop unit album of all time, they emphasize. And CEO explained that the release carried special meaning. Why? Because with some 17 members already having entered military service, this unit activity, I would say, demonstrated how the group could stay connected with fans and sustain its presence even during inevitable gaps in full group promotions, they said. Then Le Sserafim also achieved their strongest results yet. Their single Spaghetti debuted at number 50 on the Billboard Hot 100, which is their highest ranking to date, while also reaching career peaks on the UK official chart and Spotify Global. And for HYBE, it was another confirmation that LE SSERAFIM's positioning had extended far beyond K-pop and into mainstream global pop recognition. Then they mentioned Boy Next Door continuing their upward momentum as well. Their fifth mini album, The Action, sold 1.04 million copies in its first week, marking their third consecutive million seller. I actually enjoyed this album. The title track is also great. How does it go? Everybody Hollywood action, something like that, right? I quite liked it. And every one of their releases since debut, HYBE noted, has surpassed 500,000 copies, showing solid mid-tier performance consistency within HYBE's lineup. Meanwhile, I read what I was supposed to say about TWS. So let me step back. So The Action sold 1.04 million copies in its first week, marking their third consecutive million seller. And Boy Next Door's steady growth reflects both a loyal domestic fan base and increasing recognition overseas. To us, TWS, which is a boy group under Playdays Entertainment, they maintained a strong showing with their fourth mini album Play Hard, selling 640,000 copies in its debut week, which is their personal best so far. And they said that here, every one of their releases since debut has surpassed 500,000 copies, showing solid mid-tier performance consistency within HYBE's lineup. Meanwhile, Islet expanded their footprint abroad with their Japanese debut single, Tokyo Tomare, and the track topped Oricon and iTunes Japan charts, while also ranking high on Apple Music Japan, which reinforced the success of HYBE's localization strategy and the growing strength of Islet's Japanese fan base. And as I've recently talked about, they had success with their encore fan meetings recently, and they're preparing for a comeback this month, right? I'm really looking forward to that. Now, among rookies, Cortez stood out as a breakout performer. So Cortez is HYBE's latest new boy group under Big Hit Agency, and their debut album sold 440,000 copies in its first week, which is the highest figure among this year's new acts and the fourth highest first week debut in K-pop history. And CEO Lee Jung-sang described Cortez as a young creators crew, designed from the start with the global market in mind. And the group debuted at number 15 on the Billboard 200. They surpassed 100 million streams on Spotify within a month, and they reached over 7 million monthly listeners. All clear indicators of rapid international traction. And CEO Lee pointed out that this growth wasn't limited to Korea. Why? Because Cortez is already gaining visibility across North America through appearances on iHeartRadio, The Zane Lowe Show, and invitations to major global events. And HYBE is seeing this as early validation of its global first production strategy, building artists for international stages from the moment of debut. I actually checked out their radio show yesterday, and it helps that these guys are pretty fluent in English. And CEO Lee Jung-sang concluded this part by highlighting a very interesting figure that streaming accounted for 38% of HYBE's total recorded music revenue in the third quarter. And that share shows how consistently HYBE's music is being consumed worldwide, which is proof that its catalog strategy and global fandom engagement continue to deepen even in a year of heavy investment. By the way, time flies because the last time HYBE had its earnings call, and when I streamed it and talked about it in a video, that was right before Cortez' debut. And the CEO hinted at the characteristics of Cortez. Wow, time flies. Now, next, CEO Lee Jung-sang moved on to concert. And this was one area where HYBE's global reach was on full display. Mr. Lee explained that during the third quarter of 2025, HYBE artists continued to expand their connection with fans worldwide through large-scale tours and fan meetings. So first of all, Jin, BTS Jin, drew more than 330,000 fans through a 20 fan concert held across 10 cities from June to November. And his European tour marked a milestone. Why? Because it was the highest concert revenue ever recorded by a Korean solo artist, which further proved his worldwide, draw. 17, meanwhile, continued expanding their reach with the ongoing New World Tour, adding shows across Asia, North America, and Japan. Tomorrow by Together, TXT, widened their global fandom through the Act Tomorrow tour, performing in Seoul, US, and Japan, and strengthening their position as one of HYBE's most internationally active groups. They also announced at the very first show, was it the first show? Anyways, during the tour, that all members had renewed their contracts with HYBE. So congratulations on that. And HYBE wrapped up 32 concerts in 18 cities, attracting about 676,000 attendees. And these guys have been very internationally active, right? And they've been killing it. And they recently had a live stream where they talked about how these tours really help them grow as artists and performers. And they are pretty excited about their, future, especially upcoming album that they're working on. Whatever that might be, they're pretty excited about whenever it comes out. They're pretty excited about it. Now, let's start off him. Sold out every stop of their North American tour and is now set to perform at Tokyo Dome on November 18th and November 19th. That's their encore concert, making another major milestone in their global expansion. That's in a week. That's happening in a week. So I'm pretty excited about that. And CEO Lee Jae-sung emphasized that these results overall reflect the real-world outcomes of HYBE's multi-home, multi-genre strategy, right? Which is a model designed to connect artist creation and consumption beyond national borders. Now, one of the clearest examples that Lee Jae-sung noted came from N-Team, which is a Japan-based group that sold 1.14 million copies of their Korean debut album, Back to Life, on its first day. Bring me back to life. Yeah, I quite like the album, and the album topped charts in both Korea and Japan, making N-Team the first Japanese artist in history to achieve million-seller status in both countries simultaneously. And yeah, it was great that they gave a shout out to N-Team during their earnings call, because in the past, oftentimes N-Team fans, Lunes, have wished that HYBE talks about N-Team during their earnings call, but this time, yeah, they made a milestone. So CEO pointed out. But again, HYBE has so many artists, so many groups, and they are all killing it. So if they mention every single milestone and achievement and a success achieved by their artist, the earnings call will last forever. You know what I'm saying? Which is something that I've pointed out again and again for those of you who are not familiar with the concept of earnings calls, which are primarily for shareholders. Now, another clear example of HYBE's multi-home, multi-genre strategy paying off came from KATSEYE. So barely 2 years after debut, this group has secured a real foothold in the Western mainstream. So their single Gabriella, that track, it climbed to number 37 on the Billboard Hot 100. And this week, they made history with 2 Grammy nominations, Best New Artist and Best Pop Duo / Group Performance at the 68th Grammy Awards, which I recently made a video about. And CEO Lee Jae-sung said this recognition means far more than a headline. So the Best New Artist field, he noted, isn't given to just any promising act. is reserved for artists who have built genuine name recognition and measurable cultural influence within a short window. So for a team that hasn't yet reached its second anniversary, Lisa Sang called the nomination an extraordinary validation of both their artistry and HYBE's global production system. And yeah, I quite agree with that. And also, since debut, KATSEYE has operated squarely within the US market's own framework, right? Albums, content, promotion, and media exposure, all designed to balance American pop accessibility with the precision and visual storytelling DNA of K-pop. So that hybrid approach is now proving itself commercially. So Gabriella continues to climb months after release, while Gnarly has logged 11 weeks on the chart. And both songs are still rising, showing that HYBE's production model can thrive on the world's biggest stage. Now, riding that momentum, KATSEYE is launching their first North American tour, spanning 16 shows across 13 cities, with every date already sold out. So under the same US label, HYBE and Universal Music Group's Geffen Records are now forming a 4-member sister act through a new global audition project. Now, the project is called The Prelude, The Final Piece, produced in partnership with Japan's ABEMA. And the series will air early next year, featuring 3 former Dream Academy contestants among the final lineup. We have talked about it, right? Which is a clear sign that HYBE is building a continuous US-Asia pipeline of female pop talent. So we'll see how that goes. But yeah, KATSEYE is killing it. And we've recently talked about their partnership, or them doing the promotions for Gap, right? The fashion brand. And that also generated a lot of buzz on social media. People doing challenges for their choreography that they did for Gap, which was pretty interesting and great to see. Now, next, they talk about HYBE America in general. So over at HYBE America, the results are equally strong. So at Quality Control Music, Big X, The Plug, released I Hope You're Happy in late August, which debuted at number 2 on both Billboard's top rap albums and top country album charts, which is a rare genre-spanning performance, they noted. And the title track peaked at number 4 on the Billboard Hot 100 and number 1 on Hot Rap Songs, racking up over 300 million Spotify streams in its first month. Country music under Big Machine label group kept the momentum. For example, Riley Green sold out his UK and Ireland tour, and his single Change My Mind hit number 1 on the UK country airplay chart, making his first solo chart topper there. Meanwhile, newcomer E.J. Johnson, who joined QC Music late last October, he saw his monthly Spotify listeners surge after the release of Guest Station Love, highlighting HYBE's growing reach across American genres. And the company's global network extended even further south. So in Latin America, HYBE wrapped up their first locally produced audition show, Paseo La Fama, leading to the debut of new acts Musa and Santos Bravos. Santos Bravos, that's separate from Paseo La Fama, but yeah, they recently wrapped up their audition shows. So Musa. So the show's winning team from Paseo La Fama is developing a sound that fuses traditional Mexican elements with R&B and pop. On the other hand, Santos Bravos, which are trained under the K-pop production system for 6 months, officially debuted in October with their single 0%. It combines Latin rhythm with HYBE's polished choreography and storytelling style, as CEO of HYBE noted. And yes, I recently made a review video about their debut concert for Santos Bravos. And their rollout exceeded expectations, the CEO says. The group logged over 100 million social media views, surpassed 100,000 Weaver subscribers. We're talking about Santos Bravos. And they sold out a 10,000-seat debut concert in Mexico City in 2 hours, although they sold the tickets for free. if I remember correctly. And HYBE says that this confirms that its K-pop based planning and training methods can be successfully adapted to Latin cultural aesthetics, which is a new growth engine within the company's global ecosystem. Now, this division also strengthened their roster with DY, Daddy Yankee, formerly known as Daddy Yankee. So we talked about this, who signed a management deal earlier this year. So he returned with the album Lamento El Mele, featuring the single El Toke, which is a music video filmed in Korea's Myeongsaje mountain pass that drew heavy attention from both Latin media and global fans, the CEO says. And he said that the collaboration highlighted how HYBE's worldwide network can link creators across continents and genres. This is a pretty beautiful scene, by the way. So taken together, these achievements show that HYBE means what HYBE means when it talks about a multi-home, multi-genre model, right? A structure where artists can originate anywhere and operate locally and still plug into a single global creative engine. So they have a lot on their musical plate, so to say. Now let's talk about Weverse. So HYBE's Weverse platform continued to strengthen its performance through the third quarter, marking a major turning point for the company's digital business. So CEO Lee Jae-sung confirmed that Weverse achieved cumulative profitability for the first time this year, which is a result driven by steady growth in digital memberships, Weverse DM, and advertising, all recurring revenue models that provide stability beyond the traditional album or concert cycles. And Mr. Lee explained that while overall revenue naturally fluctuates with artist schedules, the rising share of digital income is helping HYBE stabilize its profit structure and improve margins. And looking ahead, CEO Lee said the platform's results should further improve in 2026. Why? Because BTS full group comeback is happening in March, and stronger e-commerce tied to artist growth and the continued scaling of Weverse proprietary digital business. And the platform's global reach also continued to expand. Monthly active users hit 11.6 million in Q3, up by nearly 2 million from a year ago. And in Japan, artists such as KATSEYE Lab and YOASOBI have become increasingly active. So for KATSEYE Lab, members are using Weverse DM to communicate directly with fans, while YOASOBI's vocalist launched her own channel and introduced a digital membership plan. And CEO said that this growing adoption by Japanese acts shows Weverse evolution into a broader pan-Asian fan platform. Now, let's talk about China. In China, HYBE recently took a major step forward, right? On November 6th, the company announced a strategic partnership with QQ Music, which is China's largest streaming service, allowing Chinese fans to subscribe to Weverse DM directly within QQ Music starting November 18th, which is in a week. At the same time, Weverse Shop opened a brand store on Tmall, earning recognition as one of 2025's Supernova Foreign Brands in China, which is a title given to international names expected to draw significant attention. And the CEO said these partnerships with China's leading music and e-commerce platforms will meaningfully expand Weverse their accessibility and user base in the region. Now, next, turning to HYBE's gaming business. The gaming business. So the company reported a strong debut for DreamAge, which is its in-house game publisher, who changed their name from HYBE IM to DreamAge pretty recently. So they launched a new MMORPG titled Architect, which is available on both mobile and PC platforms. And within just 8 days of release, Architect climbed to number 1 on Google Play's revenue rankings and has remained near the top since, marking an impressive result for a newly established publisher handling its own IP, the CEO said. He emphasized that HYBE will now prioritize profitability and operational efficiency over rapid expansion in gaming. Now, this is pretty interesting and significant and worth talking about later. Let me say that one more time. CEO Lee, while he was talking about the gaming business, emphasized that HYBE will now prioritize profitability, good, and operational efficiency, great, over rapid expansion in gaming. And they said, building on Architect's early success, the company aims to strengthen its 2025 release lineup, including Arcaren, which is a new title from Bonfire Studio, a North American developer founded by former Blizzard Entertainment veterans. And the game is expected to headline HYBE's next slate of global releases as the company refines its interactive internet entertainment portfolio. Okay? But I will talk about the gaming business later because it's going to be mentioned during the Q&A session as well. Now, then, let's talk about some numbers. HYBE's CFO, Chief Financial Officer Lee Kyung-jun, took the floor next, breaking down the company's 2025 Q3 financial performance in detail. So he began by noting that the quarter marked HYBE's strongest ever top-line result, with revenue reaching 727.2 billion Korean won, up 37.8% year over year, and slightly higher than the previous quarter. And this performance also pushed the company's year-to-date revenue to 1.93 trillion won, setting a record pace for the company's first 9 months. And Mr. Lee, CFO Lee, explained that direct artist activities, including recorded music, concerts, advertising, and appearances, accounted for 477.4 billion Korean won, or 66% of total revenue. And the remaining 249.8 billion won, or 34%, came from indirect artist activities such as merchandise, IP licensing, fan clubs, and content sales. And breaking down each category, he said the recorded music segment fell 11.5% year over year to 189.8 billion won, reflecting a relatively light comeback schedule in Q3. While several strong releases came from 17's unit project, TXT, and Islet, the overall number of major releases was fewer than in previous quarters, he noted. By contrast, though, concert revenue surged over threefold, up 231% year over year to 245 billion Korean won, driven by large-scale world tours and fan concerts from Jin, 17, TXT, and HYBE. And Mr. Lee, CFO Lee, emphasized that this was the single largest contributor to HYBE's record-breaking quarterly sales. What about merchandise and IP licensing? The revenue also performed exceptionally well, he says, rising 70% year over year to 168.3 billion won, thanks to strong sales of tour merchandise, light stakes, and character IP products. But the content segment declined around 40% to 46.8 billion won, reflecting fewer new content releases compared to the previous year. Now, these all sound fantastic, right? But then, despite the robust top line, HYBE posted an operating loss of 42.2 billion Korean won, swinging from a 54.2 billion won profit a year earlier. Now, CFO Lee attributed the temporary decline in profitability to two deliberate short-term factors. So the first was strategic investment in new global IPs. So in Korea, HYBE successfully launched Quartus, right? Establishing, where are we? Hello, Quartus. Where are you? Right here. So yeah, establishing a next generation global boy group IP. And in Latin America, the company expanded its localized IP lineup through Paseo La Fama and Santos Bravos, two projects aimed at creating homegrown talent with the K-pop production system. So the upfront marketing and content production cost for these new groups lowered HYBE's operating margin by about 6 percentage points, or roughly 44 billion Korean won. And CFO Lee framed this as a necessary investment. Why? Because while it could pressure short-term earnings, it would strengthen the company's fan base and global revenue foundation in the mid to long term. And the second factor was one-time expenses tied to the restructuring of HYBE America. So the company, they said, is transitioning. Where are we? Okay, right here. The company is transitioning from a management-centered structure to a label-centric and IP-integrated business system, aligning with the global multi-home model that gives labels greater autonomy, they said. And during this process, restructuring and efficiency-related costs shaved off another 6 percentage points from HYBE's margin. And CFO Lee said that these expenses were unavoidable for building a more stable and sustainable North American profit model. And looking ahead, the CFO noted that most of these one-time costs will be fully reflected by the fourth quarter, after which profitability should stabilize. But he cautioned that some additional spending, including initial marketing costs for the game, Dream Ages, MMORPG Architect, as well as remaining investments in HYBE America's reorganization and Santos Bravo's rollout will still appear in Q4, likely keeping near-term profit recovery limited. What does it mean? Yeah, in terms of numbers, Q4 will not be exciting either in terms of profitability. Even so, CFO stressed that HYBE's core K-pop business continues to maintain a healthy profit margin of around 10 to 15%. Okay. And the company expects a full structural recovery starting in 2026 as these transitional costs wind down. And he reaffirmed that HYBE's North American operations will return to stability next year as a new label-based system takes effect and BTS resumes group activities, and new IPs begin to monetize at scale. On the platform side, CFO provided updated metrics for Reverse, noting that monthly active users reached, we talked about that, 11.6 million, another record high. And this growth was driven by BTS members' post-service return to fan activity and increased engagement across HYBE's artist roster. In terms of transaction volume and average revenue per user, ARPPU, though, they declined quarter over quarter by 28% and 26% respectively due to a quieter artist activity schedule compared to Q2. And CFO said that this fluctuation was expected as Weverse transactional revenue still reflects the rhythm of artist schedules, though the growing proportion of digital recording sales like Weverse DM and memberships will help smooth out volatility over time. And he concluded by directly addressing shareholders. So he said that HYBE remains committed to reducing volatility and creating a more predictable earnings structure through careful operations and balanced resource allocation and continuous business refinements. Why? Because traditionally, the K-pop industry, entertainment companies, their earnings and operations are super volatile and super unpredictable. It goes up and down really dramatically. But HYBE is saying that they will become a more stable company. And then they said that as the company moves forward, CFO expects the full year results to gradually reflect the following. 1, the return of BTS as a complete group. 2, comebacks and growth from key artists. And 3, monetization of early stage IPs like Cortez and Santos Bravos. And 4, the stabilized profitability of HYBE America's restructured label operations. CFO said these efforts will allow HYBE to evolve into a global music company with a more stable, forecastable earnings model. Okay, so that was the earnings call before the Q&A. Now, the Q&A is the highlight, right? Because all of these achievements and the numbers are kind of to be expected. And of course, they all read from the script. But Q&A is where analysts ask questions. So after the formal presentation, CEO Lee Jae-sang, Jason Lee, and CFO Lee Kyung-jun opened the floor to questions from analysts. Let me turn to, all right here. And the discussion largely revolved around HYBE's investment timing, North American restructuring, and China strategy, offering deeper insight into how the company is managing growth and near-term profit pressure. So first of all, first question was from HSBC, and it focused on the company's expense discipline and investment schedule. Okay. And the analyst, I think Mr. Kim Junhyun, something, he asked whether HYBE's aggressive global IP expansion, including new markets like China and India, could offset the revenue lift expected from BTS group comeback in 2026, which is a very valid question. And he also asked whether HYBE plans to continue deploying large-scale investment next year, potentially limiting the margin recovery from BTS return. So what does it mean? They're basically saying, yo, we know that you're gonna make tons of money with BTS comeback at their album and their world tour, but are you gonna keep spending this much? You know what I'm saying? So CEO Lee Jae-sang gave a detailed and strategic response that effectively laid out HYBE's long-term philosophy. So he first acknowledged that such concerns were valid, like the mismatch between investment outflows and revenue recognition is inevitable in a fast-evolving entertainment market. But he emphasized that timely and preemptive investments were essential to preserving HYBE's leadership. He said that since BTS global breakout, many local markets have begun replicating the K-pop model, adopting HYBE's fandom business framework for their own domestic artists. And he explained that this has intensified competition, not just from global labels, but from regional upstarts in Latin America and India and Japan. And he said something like, if we slow down investment simply to protect short-term earnings, we risk surrendering first mover advantage. And he said timing matters. When a market opens, there's a limited window to establish leadership, which makes sense. And he pointed to the Latin American and U.S. initiatives as a deliberate cases of striking early, launching Santos Bravos and Mosa under HYBE Latin America, and establishing KATSEYE through HYBE America's partnership with Geffen Records. And he said these were not impulsive moves, but decisions based on the belief that strategic investment during the opportunity window is what enables sustainable growth. And he described HYBE's investment framework as a balance between earnings defense and opportunity capture, managing profitability in the short term while ensuring the company doesn't miss critical growth inflection points. And he said, protecting margins matters, but losing timing means losing markets. So something like that. Now, CFO Lee Kyung-jun followed up by offering more concrete visibility by region, though he clarified that HYBE does not issue formal expense guidance. So he confirmed that global IP expansion will continue, but emphasized that initial entry costs are front-loaded, particularly when HYBE enters a new territory and builds local infrastructure. And once those operations stabilize, unit costs fall sharply as systems and partnerships and local teams mature. Now, in the US, HYBE plans to debut a new IP in 2026, but after 2 years of experience with KATSEYE and US-based operations, the company has learned how to achieve stronger returns at lower cost. And in Latin America, 2 projects were already launched this year, right? So there will be no additional debuts in 2026, only continued stabilization and optimization of Santos Bravos and Mosa. Now, for China and India, they said the company is in exploratory stages, but has no large-scale IP debut planned next year, meaning that total investment spending will decline significantly in 2026 compared to 2025. And they summed up by saying that this year we spent heavily to enter new markets, but next year our focus shifts to stabilizing those IPs, which means we will achieve growth with much lower incremental costs. Okay, that makes sense. Then another analyst, I think it was Yi Hwa-jung from NH Investments and Securities, she asked about the financial implications of the North American restructuring, which included workforce changes and contract renewals and organizational streamlining, and whether it would yield measurable efficiency gains. And she also asked if the roughly 40 billion Korean won spent to debut 3 teams this year represents a new norm. And Yi Hwa-jung, this analyst, she puts out some interesting analyst reports, and I really liked her question. And here were the responses. So the HYBE responded that while the company could not disclose numerical guidance, the restructuring was necessary precondition for stable long-term profitability. And he reiterated that the transition from a management-centered to a label-centered IP system was critical to achieving financial stability in the US beginning in 2026, aligning with BTS Group Combat. Now, regarding debut cost, he clarified that 5 teams debuted this year, including Quartet in Korea and several bands under Paseo La Fama in Latin America, and that per team expenses vary widely by region. And he said that there's no fixed number per group, explaining that marketing intensity, local cost structures, and target demographics all influence budgets. And he added that as HYBE gains experience in a market, costs decrease meaningfully. So, for example, KATSEYE's Successor Group, currently being co-produced with Ryan Tedder under HYBE America, will require significantly less spending because the company already understands how to optimize its promotional and creative process in the US environment. I thought that was interesting, and he really emphasized that. It was evident from the tone. Like, I was able to hear that nuance from when he answered in Korean. And he said that the first project in a new region is always the most expensive, and efficiency rises with each cycle. And I hope that's the case. As a shareholder, I really hope that that's the case, because it's pretty significant amount of investments for each group. And investing, there's nothing wrong with that as long as you spend it wisely and efficiently. You know what I'm saying? All right, next. Another analyst from Hana Securities asked the final session with 2 questions. So wrapped up the Q&A session with 2 questions. So first, the rationale behind HYBE's sudden partnership announcements in China, specifically with QQ Music and Tmall. And second, updates on the gaming portfolio and whether any one-time costs were reflected in Q3. So they answered, while HYBE is cautiously optimistic about the Chinese market, uncertainty remains high. So the company has avoided heavy direct investments. Why? Because there are all kinds of global politics involved, right? And foreign policies. And instead, HYBE is pursuing partnership-based expansion with leading local platforms. And he described the QQ Music and Tmall deals as corporate-to-corporate collaborations designed to meet rising fan demand rather than short-term monetization pushes. And he said something like Chinese fans have always been among the most passionate, and rather than build from scratch, we partnered with the strongest platforms so fans can communicate more easily with artists through familiar local channels. And the QQ Music deal, launching Weverse DM integration on November 18th, and the Tmall brand shop, designated as a 2025 Supernova brand in China, represents what they called a low risk and high access model for re-entering China's digital ecosystem. Now, about the gaming question, they confirmed that HYBE has been streamlining its portfolio since early 2005, focusing resources on scalable and high-quality IP. And the company dropped, this was interesting, the company dropped several unannounced projects over the past few quarters as part of a disciplined pipeline cleanup, choosing to focus on Architect, the game by DreamAge, and Arcaren by Bonfire Studio. This is a Bonfire Studio. And select internal development titles that align with long-term trends. And they also noted a structural shift in the gaming industry itself by saying that the old model was developer-driven, now it's open innovation. Real-time feedback loops with users, alpha and beta testing, and community integration. And HYBE is adapting to that new cycle. They closed by saying that HYBE's gaming division will maintain a selective, quality-first approach, positioning itself for sustainable contribution rather than volume growth. And that was what I was hoping for. Remember, you know what? I'll talk more about this later. And the earnings call ended with a note of conviction from the CEO, who reiterated HYBE's broader philosophy by saying, even as we face short-term fluctuation, our focus is on building a predictable, resilient earnings model. And they said, with BTS return, new artist monetization, and the stabilization of our global structure, we expect these foundations to show in our results from 2026 onward. So that was the earnings call, and thanks to those people who joined in real time when I streamed. Now, I saw an interesting comment made in the chat room in real time. One of my subscribers noted that the CEO and the translator didn't sound interested. Now, I thought the translator sounded the same. But first of all, I just wanted to reiterate that these earnings calls are not for the fans, are not for HYBE artist fans or HYBE K-pop fans, although they're welcome to join in and tune in. But these are for investors, right? And we're talking about earnings calls that happen in Korea. First of all, as I noted before, most Korean companies do not even hold these public calls. So HYBE is an exception, outlier, one of the most transparent companies when it comes to these, reports and earnings. But we're not talking about Western style, like investor relations show, where CEOs sound upbeat, almost sales-like. And I, tune into earnings calls held in the United States for the companies that I am interested in or I invest in. But in Korea, the tone of these sessions is very different, right? These are earnings disclosures, not like PR events. And the CEO isn't speaking to fans or trying to build excitement. He's reporting numbers to institutional investors who already have the data in front of them. So the style tends to be dry and cautious and deliberately understated. Even more so when the quarter was disappointing. That said, I did notice that the CEO sounded kind of frustrated. Something was off with him. So I was surprised to see that even a foreign viewer noticed that. You know what I'm saying? Because he did sound unusually tense this time. Actually, let me play you a part from the earnings call. Here's an example. I mostly noticed this when he talked about the Grammy nominations of KATSEYE.
쓰고 있습니다. 그룹 본상이죠. 베스트 뉴 아티스트와 베스트 팝 듀오 그룹 퍼포먼스 두 개 부문의 후보에 오르면서 새로운 역사.
So try to pay attention to the tone and nuance
쓰고
in his
있습니다.
voice.
이번 그래미 후보 선정은 단순한 수상 후보 이상의 그런 의미를 갖습니다. 특히 그 베스트 뉴 아티스트 부문은 데뷔 첫 해의 성적이 좋은 아티스트에게 그냥 주어지는 게 아니라 심사 기간 동안 대중의 인지도를 확보하고 그리고 음악적 환경에 영향을 미친 아티스트에게만 주어지는 상이고요. 데뷔 2년이 채 되지 않은 KATSEYE가 이 부문 후보에 오른 것은 매우 이례적인 성과입니다. 이는 단기간에 강력한 글로벌 팬덤을 구축함과 동시에 상업적 성과를 거뒀음을 의미하고요. 하이브의 글로벌 제작 시스템이 서구 시장에서도 실질적인 경쟁력을 갖추었음을 상징적으로 보여주는 결과입니다. 즉 K팝의 제작 방식과 크리에이티브 프로세스가 미국 음악 시장 내에서 성공적으로 이식됐고 최고의 권위를 자랑하는 시상식에서 인정받았다는 점에서 하이브의 글로벌라이제이션 전략이 실질적 성과로 이어지고 있음을 입증한 매우 중요한 사례입니다.
So you know what I'm saying? Maybe you didn't notice it, or maybe I'm just like being. Actually, yeah. So let me just say it. Like the way he says 그랬고, 하는 거고. Because usually, I listen to HYBE's earning calls every time, and I even attend their shareholder meetings. And Mr. Lee, in the past, quarters, he's been calm and even professional when explaining HYBE's multi-home, multi-genre strategy. But this quarter's call came, I don't know, maybe something happened. Maybe he was just having a bad day, or he was grilled by large institutional investors about the earnings this time, or he wasn't satisfied with the earnings himself. But for example, when he talked about the Grammy nominations here, he sounded as if he's saying something like, yo, don't you get it? This is great. You know what I'm saying? I don't know. But maybe my guess is that this quarter's earnings call, came right after our earnings shock, right? A 42 billion won operating loss, which surprised even analysts who had expected slim profits. And I've been expecting it for the past couple weeks when the media talked about it. But so internally, that would have been a tough call. And interestingly, the shareholder letter that came out on the same day confirms this. So HYBE, this doesn't happen every time, but this quarter, they wrote and published a separate shareholder letter addressing the earnings shock. And the CEO literally opened the letter by apologizing for the company's first operating loss since IPO and explaining why it happened. And the whole message was that this loss is temporary and it's a cost of restructuring the US and launching new global IPs. So in other words, short-term pain for long-term gain. So let me read you the shareholder letter, which was published in both Korean and English. Dear esteemed shareholders of HYBE, sincere greetings from Jason Lee, CEO of HYBE. Following my appointment as CEO of HYBE in September 2024, I have upheld the tenet that the reason for a company's existence is a maximization of shareholders' value, which should be designed and implemented on a foundation of sustainability as the core principle of both business strategy development and implementation. I have also constantly stressed that achieving robust performance and articulating medium to long-term growth vision are the two key criteria for achieving these objectives. Despite these efforts, in the third quarter of 2025, we are reporting our first quarterly operating loss since HYBE's IPO. This is a result that falls short of our shareholders' expectations and a situation that may raise concerns about the company's fundamental business competitiveness. I would like to personally offer an explanation of the background for this outcome in this letter to our shareholders. The decline in profitability for the third quarter of 2025 resulted primarily from two factors: one-time costs incurred during the restructuring of our North American business operations and proactive investments for expanding our global artist IP. These two factors combined to reduce our quarterly operating profit margin by approximately 12 percentage points. However, please understand that this was driven by structural changes for improving future profitability and investments for mid to long-term growth. Fourth quarter performance will gradually improve as most of the one-time factors impacting Q3 results are resolved. However, short-term profitability recovery may be limited as some of the non-recurring restructuring and new project costs incurred in the third quarter carry over, in addition to new initial marketing expenses for Architect, the new game title launched in Q4. Despite these challenges, however, our company's fundamentals remain strong. Our K-pop business, HYBE's Essence and Core, is expected to maintain profitability of 10% to 15% for the full year. Furthermore, the majority of the factors impacting our bottom line mentioned above are expected to be resolved in the fourth quarter of this year, further accelerating the improvement in our profit structure starting next year. Notably, the resumption of BTS activities and rapid growth of our K-pop artists, greater returns from our multi-home, multi-genre strategy, expanding profits from Weverse, and the realignment of our next entertainment business as part of our medium to long-term vision will serve as the key drivers of HYBE's return to profitability next year. Based on this trajectory, we are forecasting stable double-digit operating profits for the medium to long-term horizon. 1. Proactive investments for business portfolio optimization and growth engine development. One-time costs from our North American business restructuring. So they're adding details to what they just explained in the beginning. Leveraging our 4 years of experience in the North American markets, HYBE bolstered local marketing and promotion capabilities for our K-pop artists and built solid know-how for operating global-level local artist ventures like KATSEYE in North America. In addition, we secured global top-class production networks and business partnerships so that we can follow the success of KATSEYE with subsequent new groups. This process also brought to light the inherent instability of artist management-centered contract structures, and we are in the process of transitioning to a label-based integrated IP business system. This process included a one-time adjustment for realigning our North American business and enhancing organizational efficiency, resulting in an approximately 6 percentage point profit dilution. This adjustment is a one-time cost increase incurred in order to enhance our North American operations, medium to long-term profitability, and restructure our operational systems. We are currently shifting to an integrated management system that includes all of our North American and Latin American operations, which will enhance overall efficiency and strengthen our growth infrastructure. BMLG and QC are continuing to deliver strong results based on their stable artist lineups, and we expect to begin seeing the financial rewards of our restructuring from next year as well. 2. Realignment and improvement of new businesses. During the process of HYBE's rapid growth, we deployed our investment to deal with quick shifting trends in the content and technology industries, but rapid growth is often accompanied by unseen inefficiencies, and fast diagnosis and adjustment allows a company to focus finite resources into key growth drivers. A lot of heavy words there. Accordingly, we carried out a multifaceted analysis of the soundness and efficiency of HYBE's business portfolio over the past several months, and we are applying the learnings from this process to restructure and realign certain business operations. The winding down of Binary Korea earlier this year was a part of this process. Binary Korea, by the way, was a blockchain company that they did under the partnership with Dunamu, if I remember correctly. And for DreamAge is their gaming branch, we carried out a similar realignment to address uncertainties in the publishing portfolio and reallocate resources for internal development projects. For AI Voice, where we have secured sufficient core technological capabilities, our adjustments will concentrate on identifying and focusing on commercialization opportunities. And by AI Voice, they're talking about Supertone, their AI voice technology company. With these steps, our company's new investment ventures are being organized to focus on projects with both growth potential and competitive advantage. However, adjustments often entail cost. If we were just trying to protect current earnings, we could adjust the pace of these costs. But the longer these adjustments take, the greater the cost incurred will inevitably be. And that is why we are working through these adjustments and structural improvements expeditiously. In addition, we are reinforcing the criteria governing approval of new ventures So please understand that this is an ongoing process to achieve financial performance that can sustain HYBE's medium to long-term vision. It's gonna go on for a while. 2. Mid to long-term investment strategy based on our growth philosophy. It cannot be denied that the best management decision should aim to both achieve short-term performance and secure long-term growth drivers. However, it's also inevitable that the interests of short-term results can collide with long-term growth. This sort of dilemma occurs even more often for HYBE, a company that continues to hone its competitive edge through a large and proactive investment into new artists. To resolve these collisions, the benchmark I use for making key decisions is our core growth philosophy. This is our company's core value and the solid foundation that made HYBE what it is today. HYBE's growth philosophy is to create superlative IP and lead the fandom business, which are built on high content quality and respect for the fans. HYBE grows by providing better content and experiences to fans and taking the resulting rewards to expand into new markets and new genres. This philosophy has already been proven by the success of KATSEYE and N-Team. Nearly 5 years of long-term investment bore fruits and led to tangible results from HYBE's local production model in the US and Japanese markets. The fandom business philosophy and model created by HYBE became a benchmark for the global music industry, and similar investments are quickly pouring into markets with high potential. With high potential. All right. As Chief Executive Officer, I could have chosen to pull back investments in new markets and prioritize short-term results, but I remain convinced that such a course not only contradicts HYBE's growth philosophy, but will lead to a failure in securing long-term growth drivers. HYBE is a company that has unmatched content production and operational know-how, and I felt that delaying investments intended to preempt market opportunities in favor of keeping up our numbers in the short term would not be the right management decision. Since the market won't wait for us, HYBE chose to boldly invest into the Latin American market, one of the world's fastest growing markets, and important for its proximity to the world's largest US market, so that we may secure leadership in Latin music. I believe that our shareholders will also find this philosophy relatable. As a result, Santos Bravos debuted on October 21st. Santos Bravos is a 5-member male group formed through an audition program developed and produced by HYBE Latin America, showcasing a hybrid sound that combines the K-pop production system with the Latin world's unique musical sensibilities. Santos Bravos received intense coverage from local and global music media and has already made their presence felt in the Latin market. The new team is proof that K-pop production capabilities can be effectively expanded into the Latin sphere and represents a solid and sustainable foundation for IP growth in that market. In addition, 3 bands were formed through the Latin band audition Pase la Fama. Moza, Destino, and Loch Clica began their activities armed with their own unique musical color. Moza made a global splash by appearing on the stage at the Billboard Latin Music Awards, and Destino is expanding its fan base by taking part in a variety of local festivals. Their debut and activities show that HYBE's multi-home, multi-genre strategy is producing real results in the Latin market as well, and is indicative of the further expansion of HYBE's global music portfolio. Now, if you've been paying attention to these groups, these bands, and if you have listened to their music, please let me know what you think, okay? Large-scale investment is inevitable for entering new geographical and genre market. I should have translated the shareholder myself. I don't know. They're using some heavy words for translating this shareholder into English. Large-scale investment is inevitable for entering new geographical and genre markets, and the accounting practice of such costs being captured as a one-time expense at debut placed a considerable strain on short-term profitability. However, As already verified by KATSEYE and team, HYBE's investment in the Latin region for debuting local artists will serve as a bedrock for better performance in the medium term. From next year, costs will shift from one-time expenditure for debut into a more steady structure for artist activities and operations, driving the recovery of our Latin business profitability. Interesting. Okay. Investment continues in North America for multiple artists that will follow the success of KATSEYE. In addition, as already covered by the media, HYBE has begun investment for artist development in India, which is a market with the world's largest population and the second largest number of music streamers in the world. This is part of the process of HYBE's evolution into a true multi-home, multi-genre music business. I hope you will continue to watch our efforts with interest and support. 3. Solid core businesses. Visible results of the multi-home, multi-genre strategy. HYBE's core business in the music industry with our K-pop artists at its center continues to grow robustly. Building on this strong foundation, HYBE's global music business is expanding into new areas. KATSEYE is a prime example proving the viability of HYBE's local production model and the market. Just a year into debut, KATSEYE continues to break records on the Billboard Hot 100 chart, and the group's first 13-city North American tour sold out immediately for all shows, including new stops. Spotify monthly listeners exceeded 33 million, which is the best performance among all K-pop-based artists. They were nominated in the Grammys Best New Artist and Best Pop Duo/Group Performance categories, a further indication that HYBE's global production system has secured tangible competitiveness in the Western market. Especially noteworthy is KATSEYE's nomination for Best New Artist, which is not just bestowed to an artist debuting that year with stellar numbers. It is an honor reserved for an artist who has begun to generate widespread and public awareness and make an impact on the musical environment during the period of review for the award, regardless of their actual debut date. The fact that KATSEYE, less than 2 years since their debut, was nominated in this category is testament to the group having transcended the traditional label of a new artist to create a powerful global fandom and achieve commercial success, all in a very short span of time. This is an important case that offers proof of HYBE's globalization strategy producing real results. With a solid foundation built on fandom and with concert at its core, our North American revenue model will swing fully into gear next year. So this is basically a summary of the entire earnings call. And I can see now why CEO sounded that way during the earnings call, kind of tired and frustrated, because I'm pretty sure he's been saying these same things to investors over and over again, saying that, yo, we are doing well. Look at all these achievements achieved by these artists, especially KATSEYE, and we are spending because we have to. But since I begun reading and almost finished, let me finish. With their recent Korean debut album, N-Team became the first artist from Japan to become million sellers in both Korea and Japan, indicating again that HYBE's global production prowess and its multi-home, multi-genre strategy are producing tangible results not just in the US but also in Japan, the world's second largest music market. The fact that artists from Japan debuted successfully in Korea and is creating a new fan base distinct from the K-pop fandom is especially encouraging. Korean fans who lean towards Japanese music are naturally drawn in, creating a case where HYBE's multi-home, multi-genre strategy has linked markets into countries. There were voices of concern when HYBE was pouring investments into the discovery and development of overseas artists as part of its multi-home, multi-genre strategy. Criticism and opposition abounded, questioning the validity of carrying out large-scale investments, placing a burden on the bottom line in a highly competitive market with no clear guarantee of success. But KATSEYE and N-Team's success proves that HYBE's direction was the right one, and this was made possible by the steadfast trust and support of our shareholders. I'm going to have some things to say about what this letter is saying. I will talk about it at the end. Music is fundamentally an industry in a state of constant evolution as fan emotions and taste change. Fans want the familiar music they've come to love, but simultaneously discover new resonance in new sounds and narratives. HYBE believes that the path to sustainable growth is by broadening the expandability of music and market rather than repeating current formulas of success at the intersection of these two fan trends. HYBE is creating an ecosystem for fans around the world to expand the horizon of their musical experience by adding new ways of expression and regional diversity on top of the strengths of K-pop. the essence of HYBE's business as a music industry. I agree. And continued investment is not a choice but a necessity for medium to long-term growth. There's no other company in existence that can devote large-scale investments into new artists and content based on proven conviction, which makes bold content investments another competitive edge held by HYBE. Okay, I agree too. This is an important part of HYBE's continued pursuit of its multi-home, multi-genre strategy. 2. Weverse profitability turnaround and stronger foundations for growth. For the past year, since taking the position of CEO, I have continued our structural reinforcement to ensure the sustained growth of our platform business. As a result, Weverse recorded a cumulative surplus in the third quarter of this year, transforming the structure of HYBE's platform business from traffic-based growth into a business that can generate revenue. First, we adjusted our sales strategy and operational organization to strengthen the service models of our digital business, such as digital memberships, WDM, and advertising that can generate revenue independent of artist events. As a result, these businesses achieved average quarterly growth of 30% and stabilized revenue volatility. Our digital business, which currently accounts for over 10% of all Weverse revenue, contributed significantly to the platform's overall profitability and stability as well. We have also improved our costs by streamlining Weverse e-commerce logistics over the past several months, which provided another key foundation for Weverse turnaround. For bringing in new artists, we focus strategically on artists in Japan, the world's second largest music market, bringing on board YOASOBI, Mrs. Green Apple, Imase, and several artist groups from KATSEYE Lab as Weverse partners. During this process, we are adjusting the speed of bringing in artists from North and South America and Europe, a deliberate choice to ensure we utilize finite resources in the most effective way. In addition, Weverse traffic continues to increase, recording an all-time high of 11.6 million MAUs in the third quarter. MAUs stand for monthly active users. In 2026, new Japanese artists coming on board, BTS resuming their activities, the expansion of the global activities of key artists, and the accompanying revenue increase of digital business expansion are expected to dramatically expand profitability. All right, last page. In closing, HYBE's fundamentals remain unchanged, they said. We will continue to further strengthen our sustainable growth on our bedrock value of bringing fans and artists together with music at the core. I would like to sincerely thank our shareholders for your continued trust and encouragement, and will endeavor to repay your support through responsible and accountable results. Jason Lee, CEO HYBE. So what do you think? I know most of you do not invest in HYBE. I know many of you ask me about how you can invest in HYBE. Sorry, I don't have an answer for that. You should contact brokerage services in your own region and see if they have available services so that you can buy like international stocks like HYBE. But let's imagine that you invest a considerable amount of assets in HYBE. What do you think about this shareholder letter? Do you buy that? Do you agree with what they said? So first of all, I think this letter feels like something between an apology and a strategy memo. So Jason Lee, where are you? He doesn't waste time sugarcoating, right? He starts by saying straight out that the company has just recorded its first operating loss since going IPO. And that opening line alone sets a tone. Pretty serious and self-aware and slightly defensive. Or quite defensive. And the letter's main goal is to explain what went wrong and why investors shouldn't panic. And he points to two big reasons for the loss, right? The one-time cost from restructuring HYBE's North American operations, which is interesting, and the heavy upfront spending on new artist projects overseas. In other words, it wasn't that HYBE's business collapsed. It was that they spent heavily to fix their structure and push into new markets. And that distinction matters because it's trying to convince investors that this is a short-term dip, not a long-term problem. But what makes the letter interesting isn't the numbers, it's the tone, right? You can tell this guy, Mr. Lee, is writing from a defensive place. He repeats phrases like, please understand, or I would like to personally offer an explanation, which you almost never see in formal Korean corporate statements, shareholder letters. It's not arrogant, but it's not relaxed either. It reads like someone trying to regain trust after a tough quarter, careful not to sound dismissive or detached. And when he talks about HYBE's growth philosophy, for example, you can feel him trying to shift the conversation from damage control to vision. And his point is that HYBE's entire identity depends on bold and early investment. That the company cannot afford to slow down just to make the quarterly numbers look good. It reminds us that this is the same company that built global franchises, like BTS, for younger ones, for recent ones like N-Team and KATSEYE, by betting early and big. And he's telling investors that if we play it safe, we lose what makes HYBE HYBE. And that kind of reminds me of the aggressive strategy that the company adopted when BTS first broke into the American market majorly, right? And what stands out, the examples he brings up in this letter, like KATSEYE's Grammy nominations and N-Team's million-seller record, and Weverse finally turning profitable, are all chosen to prove that those risky investments actually work, right? They serve as small wins to justify the bigger, riskier bets in Latin America and North America. But what stands out most, I think, is also how restrained the whole thing feels. Because there's no overpromising or flashy optimism. It's all about discipline, restructuring, and focusing on efficiency, and getting Weverse profitable, and expanding IP globally. So the tone matches what we heard on the earnings call, right? Kind of calm, tired, but at the same time determined. So yeah, the letter kind of reads like a reset for me. HYBE knows that it had a rough quarter and doesn't pretend otherwise. But it also refuses to act like the sky is falling. Instead, they're basically saying that we took a hit now, so we don't have to later. And for a company as growth obsessed as HYBE, that's probably the most honest thing it could say right now at this point. But in general, I really support companies that are making major investments as long as they truly believe in it, and as long as they invest in the large, right markets and right places. You know what I'm saying? But as they noted in the letter, they have decided to close down some businesses that no longer work. But those businesses were the same businesses that were once confident about. For example, the blockchain business that they, partnered with Dynamo, for example. Back in 2022, Lee Jae-sang was the same guy. He was at the time the CEO of HYBE America. He sounded, at least, confident about blockchain and NFT business. But in the end, they decided that, this is not working. So they shut it down. The Levels project, right? And what was it? Binary Korea and Levels. And this proves that it's not that everything HYBE does is correct. I don't know. Over the long term, I personally believe that blockchain is a promising field, and I invest in some businesses. But not every company has to invest in NFTs, for example. So what I'm trying to say is that as a shareholder, I hope that HYBE doesn't follow the hype. You know what I'm saying? And it controls that. I hope that they try to be as efficient as possible when they invest. So there's nothing wrong for me, from my perspective. There's nothing wrong with investing in music and new IPs and new artists. But even then, I feel like if they try, they can make investment as efficient as possible. If they save like here and there, So I hope they don't do that. And the gaming part, they also said in the letter that they decided to restructure and decided to shut down some unannounced games in their pipeline. And I think they have realized that there's no point in publishing games that do not really gain attraction, attention, or make revenues. And I agree. And it's good that they have realized that, at least now. And I hope that the Architect and Arcane do well. But when they said that Architect is doing well on like Google App Store, Google Play, and then in terms of the revenue, but at the same time they're pouring investments in terms of marketing. Like they've been airing TV commercials on television. I've noticed that. So if you spend in marketing, it makes sense that it generates revenue. But then it's not really creating profits for you. You know what I'm saying? So what I'm hoping is that they really create synergies between the games and the content and music business that they do. At this point, I don't see any synergies. Ideally, I hope, or in an ideal world, HYBE creates games that even their artists, idol members are excited about without asking them to play for them. You know what I'm saying? For example, we have a bunch of HYBE artists who are also gamers. And I'm talking about like BTS Jin, Jungkook, V, LE SSERAFIM, Sakura, for example. They love games. And in an ideal world, HYBE makes games that even these guys are excited about playing without being asked to. Then there will be tons of synergies, right? I don't see that's gonna be the case with these games. You know what I'm saying? So we'll see. In general, if you're good at something, or if you're really believing in something, or if you really believe that something is promising, I think making investments is the right choice. But when it comes to gaming business, is HYBE really good at it? Is HYBE really believing in it? Okay, yeah, the gaming business itself could be promising, but is HYBE good at it or believing in it? Which is exactly why I asked a relevant question about the gaming business when I attended the shareholder meeting. You know what I'm saying? I don't know. We'll have to see. Also, even when it comes to content investments, there are certain areas that I kind of feel iffy about. For example, this collaboration that they announced a few months ago, like HYBE America collaborating with AU, like a major YouTuber. This is the audition program for a next generation pop group, and I've heard that the audition program itself is kind of, there's some like sketchy elements about that. So as a shareholder, I don't know how this is gonna go. And another element, this K-pop film, is this investment really worth it? You know what I'm saying? Maybe you disagree with me. Maybe you see, yeah, these are great strategies and tactical investments that they're making and the partnerships. But are they really making investments in the right places? So those are the questions that I have as a shareholder, investor. But we'll see. But again, when it comes to these new IPs and artist lineups that they're building on, yeah, I support their investments because I know for a fact that they make great content and music, and I really enjoy their content. But there are some areas that I don't necessarily agree with as an investor. But maybe you think otherwise, so feel free to leave comments in the comment section. As always, I'm not sure how many of you are still watching this video. Sorry, that shareholder letter took longer than I thought. But what stood out to you the most from this earnings call and the shareholder letter? Like the scale of HYBE losses, or the confidence with which they're defending them? Or do you think that this kind of long-term invest now and profit later strategy makes sense in an industry that changes as fast as, I don't know, like pop music? And when BTS returns next year, will that really be enough to turn the company's numbers around? Of course, the answer is yes. I guess the more appropriate question is, what would the mood feel like next year when it comes to next spring? Of course, fourth quarter earnings call might not be stellar either because the cost will be reflected in that report as well. But we'll see. We'll see. So leave your thoughts in the comment section. And as always, let's stay positive, respectful, and classy. Peace, love. Bye-bye.